Hi everybody, how are you doing? So welcome to the Secret to Mastering Year-end for Town and Parish Council. So I'll hand over to you, Hannah, to
Thanks, John. No pressure there. No pressure.
Yeah.
Lovely. Thank you. All right, let's start there we go. Thank you, John. Hello, everybody. I do recognise some names on here today, so lovely to have you along with us. As John said, not a specific Scribe session today. We do have separate Scribe sessions about how completing the year-end on the software itself. This is intended to be a bit more of an overview, particularly that we've sort of got a couple of months before the year-end actually comes around. We're in sort of January time, with a sort of a focus particularly on the preparation and thinking about the things that we can do now. So I can't personally believe that we're back in January and I'm back here doing this again. I do this every year, and to think that we're now here again at this sort of year-end point coming up is just madness. But hopefully we can think about getting ahead, getting prepared, looking at the AGAR itself as well, but with the consideration at this point now, the things that we can be doing to be proactive in order to prepare ourselves when it does come to that point and we're in April and we've got to actually complete this AGAR. Okay, also really interesting to see how many of you is your first year, so I think that's important as well. So I want to kind of cover some important things to be aware of and some resources that you can go and access to really help you as well, because it can be daunting if it's your first year, and obviously making sure that you do all those things, because there are a lot of elements to complete, and it's also particularly important with regards to sort of the order and making sure things are done in the right process. So yeah, let's go. So then, as we said, preparing for year-end firstly though, so I think it's important to start with thinking about this additional workload. And there was an indication as well about this time and time management, and we hear so often from clerks who say they've got issues with time, and often it's the amount of hours that they've got available to them simply isn't enough to do all the things that they need to do. And obviously with regards to year-end and completing the AGAR, that's just more time again. So if possible, I think it's important to expect and recognise that there is going to be a time factor, an additional time factor with completing this. And if you can block out some time for you in your diary and your schedule to do so, then it's absolutely key. Don't find, odd half an hour here and there. We never always have so many times in the year-end thick of it, when we come back into Scribe and to work in the next morning, how many emails that we're getting from clerks that are sort of 11, midnight, 1 a.m. kind of times, of people obviously burning the midnight oil trying to get this done. So if you can, try and allocate some time to do that. And also between now and the year end as well. So if some of the things we're going to talk about in terms of preparation, maybe you're feeling a little bit underprepared, you've got some more things you need to do, then factor some time in between now and then as well, so that you've got some more time to allocate to those sort of things as well if possible. I know how hard that is, but try and block some time out for you as well. So obviously, in order to complete the AGAR and your accounting statements, you're going to need some up-to-date and accurate data. So the cash book is key, because that's going to be the hub and the core of all the account information that you need to complete everything. So it's important to make sure your data is accurately recorded in the cash book. So if you're sitting here now and maybe that you're not quite up to date and you haven't done this for a while, or maybe you need to put some more information in, or you haven't done your bank reconciliation for a while, now is the time to say, right, I need to do this. This is absolutely key. If I don't do this, it's just going to be a big mountain come April, and it's not a nice place to be. So monthly bank reconciliations if possible as well, because that's going to reduce the issues if you do have one that doesn't reconcile, because you're only going to have to go back a month. And also, if you haven't done any work on your VAT claim for a while, obviously if you do VAT returns, then you're going to be governed by the dates to which it's necessary to submit them. But if you claim via Form 126, I'd recommend you do it at least annually. Up to the 31st of March is absolutely fine. And if you haven't done one for a while, or you're collating it, then something simple as making sure that the information in your cash book has got VAT on it and is correct, and you've got the VAT numbers and the invoices showing that VAT number. You need to have your invoice from your supplier with the VAT number on it. It needs to show the amount of VAT being charged. These are sort of the things you can be doing now in terms of preparation. Just a couple of examples from Scribe here. So making sure that your bank reconciliation is balancing, as we said, and also just a VAT return and VAT claim, making sure that you've got that information. So if you are on Scribe, maybe even running that form 126 now and making sure the information's pulling through. If you've got missing VAT numbers, go away and locate them, so it's just saving you time when you get to that point. Okay. Also, it's important to not only have the information, but also understand what you're going to do with that information when it comes to the year end as well. So are you going to be completing your year end receipts and payments more of a cash basis or an income and expenditure basis? So I think it's important, particularly because we've got some new clerks, presumably on first year users on here. So understanding that difference. So if you are under 200,000, so income or expenditure, then you can complete your AGAR accounting statements in a receipts and payments format. If you're over 200,000, you need to do an income expenditure, but that's only when you hit 3 consecutive years. So also be aware that if you happen to go over in 1 year because you've made a lot of large payments, or you've had a lot of income, you've had a large amount of SIL, for example, and it's pushed you over that threshold, it's not necessary to move to I&E until you get to a point where you've had 3 consecutive years above the threshold. Having said all that, you can be smaller and opt to use income and expenditure. That often comes about as when a clerk or counsellors maybe have more of a financial background and expecting a maybe more sophisticated approach to accounting, because receipts and payments is that more simple cash basis of recording what happens, when it happens, regardless of when it relates to. So make a payment, dated today, it goes in the cash book as at that date. Okay, same for income, doesn't matter when it relates to, it's when it happens. Okay, that's different to income and expenditure, because income and expenditure is going to take account of timings. It considers when does that payment or that income that you've had actually relate to in terms of time, and it's why it's necessary to make adjustments at the year end. Okay, so be clear on the differences, and we'll talk a bit more about that once we get to actually completing the accounting statements, but also the approach that you're going to be taking. So it might also be that you've done a year end before, but if you're now at a different council, or maybe you've moved approaches, things will be different if you've maybe previously done it in receipts and payments and you're moving to I&E. So just be aware of the differences when you need to do it, and as I said, we'll look a little bit more detail about what that means. Okay, also be aware that if you move between accounting approaches, you need to restate the prior year. So when you submit your accounting statements that has current year and the prior year, both have to be using the same accounting approach. So if you've moved between them, you may need to restate last year, and again, that's some additional work, and if you know that you need to restate last year, that's something that you can be doing now in readiness for when you get to the year end. Also important to familiarise yourself with what you actually need to do. So 2 important things here. One is if you're new completely, then obviously you need to know what's going on, but also possibly if you have a different external auditor. So there's been a rejig with some of the contracts with external auditors. Most of you probably still PKF because they've maintained the majority, but there has been some changes. Now, it shouldn't change things massively because you're still going to pretty much have to collate the same information, but there may just be a slightly different format, or the way that they describe, explain things, send things over might be a little bit different, so just be aware of that as well. You're going to want to understand what level of audit you need to do and what this entails, okay, and also whether your council might be able to be exempt from audit. So if you're under 25,000 total income, total expenditure, you can exempt yourselves from audit. There are some other criteria. You have to be formed within over 3 years, and you mustn't have any previous issues with previous audit. But if you match them up, then you can exempt yourself from audit as well. So make sure you understand that. At the moment, the external auditor, I looked at PKF this morning, they've still got last year's information, but pretty much everything will be the same. And there's some really, really good stuff on there. If you look on there, some decision trees to show you what you need to do, and flow charts of the information that you need to provide. So if you've not done this before, I'd highly recommend you get on that website and you have a look so that you're clear. What do I need to do, in what order, and what do I need to provide? So it's quite clear, because we'll talk about this in sort of general terms, but it's important to understand where you fit into each level of what you actually need to do. Okay. Also, make sure you've got a copy of your JPEG Practitioner's Guide that supports the preparation of the AGAR, basically like the handbook or the guidebook that takes you through everything, explains it again in a lot more detail that I could ever dream of going into in a session such as today. Really good thing to have to refer to, so if you haven't got that, I'd get one. Hopefully we can pop the link in, or I can do it at the end so that you've got a link to that so you can refer to that. And again, do you need to restate the prior year? So we talked about that in the previous slide if you've moved between accounting approaches, but you may also have another reason that you need to restate. You might have had something from the external auditor from last year's accounts that stated you need to restate the information, and often that's as simple as just boxes, and they tell you the values you need to put in those boxes, so obviously it's important to make sure you do that. Or it might be that you've identified an error. You know, if you look back over what you've done previously and realise something's been omitted. Or it might be, often as we see, if you're a new clerk to a new council, often things are found at this point where things are identified that have been missed out or done incorrectly. So you may have a scenario where you've identified a need to restate. If so, again, you can be doing that now in readiness, because you want to know what your box one for this year is going to be, so you're ready to start. So again, it's something else that you're not having to think about. Okay. How complicated your restatement is will depend obviously on the issue. If you've got software, it's likely that it makes that a little bit easier, but you will have to just do some working back to change the boxes accordingly, or the lines accordingly, to do so. Okay. So thinking about, so that's kind of taken us through. So thinking about, is our information up to date? Is our cash book got as much information as possible? Have we done our bank recs? Is our VAT claim in a good place if we did so? Do we know what we need to do? So are we okay with what the auditor's going to ask us? Have we got all the documents and information, sort of resources that we can get to? And if we need to do any additional work like restating, can we do that beforehand? And have we got the time to do all those things? Is sort of the first part of that. And as I said at the start, kind of key at this point, because we've got those sort of 2 months to play with, that we can do all those things. We've got time for that already for now. Okay. That then takes us into the AGAR itself. So thinking about, we're beyond the 31st of March, we're ready to start completing it. Okay. So the AGAR, the Annual Governance and Accountability Return for the year 1st of April to the 31st of March. 3 sections: the Internal Audit Report, Section 1, the Annual Governance Statement, and Section 2, the Accounting Statements. And I'll talk about the first 2 reasonably briefly, because a lot of that is an overview of the sort of internal controls, the procedures, the things that you're doing, assertions that those things are happening, and hopefully that they are. If they've been happening previously, then it should just be continuing making sure that those procedures are in place. And then with a more of a focus on Section 2, the accounting statements, because that's the numbers bit, the bit you actually have to collate, that sort of generally requires more work and understanding of what you actually need to do, and is what I want to spend a bit more time talking about today. Okay, but firstly then, the internal audit report. So that's the summarised conclusions from the internal auditor. They'll come in and do their report, and at the very least they should give you enough information in order to able to answer these questions or objectives in here. This is taken directly from the AGAR itself, so they should do a report that allows you to yes, no, answer these assertions in here about the controls that they're checking. Okay, so they're going to, as an overall, they're going to consider the adequacy, effectiveness of your procedures, your internal controls, and the way things are done. The scope and extent will depend on your size and circumstances, but as I said, it should be at least annually and allow you to answer these in the AGAR itself. Okay, so that's something obviously that you need to do. If you've not got one booked in already, then you need to find an internal auditor that's going to come and look at all this and all these items on here. Quite closely related to that is then Section 1, the Annual Governance Statement, which is to review the effectiveness of the system of internal controls, and again is a yes/no response to these assertions in here. As I said, again, it's more about the way things are done, the procedures, the processes, strongly linked to the internal audit report as well, because I think it's 2 and 6 about actually having 6 is actually about having an audit. So once you've had the auditor come in, then you can say yes, you have done that, and that's the relationship is quite close. Okay, if you can say yes, that's obviously the ideal, and you should have information evidence to be able to support that. You don't have to provide it to the external auditor, but you just be able to have to confidently say yes based on the things that you are doing. If it's a no, you can't say that, yeah, those things are in place, then you'd need to provide some additional information, reasons why you've had to answer no, and what is being done to resolve it going forward. So what are you doing to resolve the fact that you are not being able to answer yes to this assertion in terms of these procedures and controls that are in place. Okay, so as I said, if everything's running along smoothly and it's all going along nicely, then this should hopefully be a fairly simple yes exercise, confirmation that all those things are in place. If no, then hopefully there's some things in place to kind of address that, and it's just an acceptance of at this point it had to be a no, but there's some work moving forward to resolve those issues. Okay, that then takes us on to section 2, the accounting statements. So because this year the year end's coming up now is not currently available, I've still got last year's in here, but basically you will be completing the right hand column for the 31st of March 23, and then the current will become your prior year as well, so you've got to compare the two. As I said, they need to be with the same accounting approach. Okay, so just remember that if you need to restate, and you're going to take the information generally from your cash book, depending on the level of detail, and the receipts and payments or income expenditure approach will be how you need to do. So I want to consider all of those lined within this section, so we can think about some of the things to be mindful of when we complete this, some things that might catch you out or things to be mindful of as you're doing it. Okay, going back then, we talked about the difference between receipts and payments and income expenditure, and we talked about when is relevant to you, to which you need to do. Okay, and now we can think about which approach that we would need to take once we're at that point. So this is assuming all your data is on, you've actually entered into the cash book, you've reconciled your bank to the 31st of March, and you're ready to go with this information. Okay, if you're working in receipts and payments, you'll probably be pleased to know it's fairly straightforward, because your figures can pretty much come directly from the cash book. You're using the total gross figures, including VAT, and you put them in the relevant boxes, so you're just splitting them out for things like staff costs, the precept, any loan repayments. Okay, so it's fairly straightforward once you're at that point. If you are working in income expenditure, then there's some more work to be done. That needs to be excluded, because that's going to constitute a debtor or a creditor, depending on whether you are owed VAT or you owe VAT to HMRC at the year end. And you also need to think about those adjustments that we talked about in terms of timings. Okay, because we're going to update the accounts basically to take account of timings, we need to think about any adjustments we need to put through. So do we have creditors, people we owe? Are there debtors, customers that owe us, that we need to account for to make those appropriate adjustments? When you're doing those adjustments, there's some things to consider. First is materiality, so the level of the adjustment. You might want to set a limit that you don't worry about anything below £50, for example, that you're not going to bother where you owe, for a few stamps or a few staples, pens, whatever it may be, minor things you don't worry about. Okay, if you set that level, then obviously just be consistent and use that year on year. And also consider the regularity of your adjustments. So for example, if every month you have a grounds maintenance contractor that you pay the following month, if they're going to come and do their work in March and you pay that in April, in theory that is a creditor, but if that happens every single month, you're going to have 12 months worth without needing to adjust at the end of each year end. Okay, so if it happens regularly and it goes on a monthly basis, then you don't need to worry about that as an adjustment. It would only be if it went over and above that. So if your grounds maintenance contractor came in March and a tree had fallen down and they did lots of extra work, that additional level of work would be relevant to be being adjusted for, but the normal base level, that's absolutely fine. Okay, and obviously important to ensure that last year's adjustments are reversed. If you've got software, then that's almost certainly going to be done for you, but if you're working in a spreadsheet, just make sure that it's all pulling through. And sort of as a general rule of obviously your spreadsheets, make sure, double, triple check that your formulas are working, got no circular references, etc. As well. And there's just some examples from Scribe there of just some things to put in terms of adjustments, just to be clear as well, because we've had this question come up previously about the difference between accruals and creditors. So accruals they basically do the same thing. They're going to increase the expenditure relevant to the year because they're expected additional cost. A creditor is where you've got an invoice, you owe it, but for whatever reason it's not going to be paid until later. So you've got a March invoice, but due to payment approvals it's going to be paid in April. An accrual is where you've got an expectation that you're going to incur some expenditure. So it might be that you've had some work done, something's going to happen, but as of yet, you've not had an invoice. But you want to reflect the fact that you expect there to be a cost, and therefore you put in an adjustment. So I've got some expecting to pay copies on the printer, for example. Reverse of that is prepayments, where you've paid things ahead of time. So in this example, I've paid out for some maintenance, but for whatever reason the work has been delayed, so I want to move it to next year, because actually that's when the work relates to. So it's all about thinking about the timings. When did the work or the goods or services, when were they supplied? When does it relate to? And then you've also got to think about your income. So if you had any customers who owe you, have you got debtors? So you need to increase your income for this year for those things that were not paid for relevant to this year. Or have you got people who've paid you, but it's for goods or services that you're not going to provide until the new year? So that's receipts in advance. For example, if you've taken income for hall hire, but they're actually not going to have the benefit of that hire until, say, maybe next summer, you need to adjust for that to move that income into the new year. So it's all about thinking about those timings. Okay. That then moves us on to thinking about actually filling in the boxes, or the lines, I should say. That's sort of updated to calling them lines on the AGAR accounting statements, and just some things to think about as you work through them. Okay, so line 1 is balances brought forward. Obviously make sure it's equal to box 7 of the previous year. So one of the first things I'd always suggest that you do is just make sure that your previous year is actually what you submitted. You know, particularly if you've had a few attempts and a few drafts, make sure it actually matches to what was sent up. Of course, unless you're restating, and then if you're restating and you've ended up changing box 7 of last year, you're going to have an updated box 1. So make sure that all follows through accordingly to what you're using for the prior year. Okay. Line 2 is the precept or rates or levies. Rates or levies only relevant to drainage board, so you're just thinking about the precept itself. No levies, no SIL in here. And also, if you do receive the precept from your district council along with, say, council tax support, make sure you exclude that as well. So you might receive a larger payment than what actually goes into box 2 because you're just interested in the precept. Line 3 is your total other receipts. So that's basically everything else, all your other income, but you don't exclude bank transfers. So movements of money between accounts, obviously you need to exclude because it's just internal, it's not actually true income, so you just want to exclude that. Exclude VAT if you're working in income expenditure. So if you charge VAT out, who receives any VAT back to you, then that comes out if you're working in income expenditure. And also be mindful of making sure you don't overstate your receipts by including things like credit notes, refunds, corrections of overpayments. If you receive a credit note or a refund from a supplier, it should go into other payments, so it's a negative payment rather than income. So although you've received it, it's not actually a receipt, it's not true income, it's just a correction related to a payment that you've made. Okay, so do be aware of that. Line 4, staff costs. Just being aware of the guidance as to what can be included. That changed a couple of years ago, I think it was, where it was more about the core staff costs, so things, training, mileage, things like that are external. So although they might be, according to you, staff cost in your sort of budget or your account system, it's not a staff cost in box line 4, which is your core salary, pensions, NI tax, etc. Okay, so just be aware that you accounted for that correctly. Loan 5 is your loan interest or capital repayments. Obviously that just needs to be separately from your other payments. And then line 6 is all your other payments, obviously excluding your staff costs and your loan repayments. And in the same way as I mentioned about line 3 in receipts, again, exclude any bank transfers or movements of money, exclude VAT if you're working in income expenditure. And again, they're negative payments if you've had credit notes or refunds from suppliers, and the reverse of that, if you're paying your customers back, so if you're refunding your customers, although you've made them a payment, it's a negative receipt and it comes out of box line 3 rather than line 6. Okay, so just be aware of that because you have the potential to overstate your receipts and your payments if you just get that wrong. Okay, so line 7 is your balance carried forward. Obviously you need to make sure that adds up. Okay, that's absolutely key. So box is 1, your opening position, plus your precept and your other receipts 2 and 3, less 4, 5 and 6, your staff cost, your loan and your other payments to give you box 7. All right, so obviously make sure that sums. And then you've got line 8, which is your total value of cash and short-term investments. So that's basically your bank rec position. So as I said at the start of this needs to be your starting point, should be your bank rec and making sure the bank balance is, because it's going to be your box 8. If you're working in receipts and payments, then your check is that your line 7 is equal to your line 8. They will be the same figure. Okay, if it's not, then there's an error, you've done something wrong. Okay, if you're working in income expenditure, it's correct for 7 and 8 to be different, because they're going to be different by the value of your adjustment. So any VAT difference, any debtors, any creditors, prepayments, whatever it may be, that's going to account for the difference, and you need to explain that. Okay. Also, as a quick point, thinking about line 8, just to say as well, because there's something else that crops up in terms of differences, is just understanding the difference between unpresented items and end of year adjustments. So adjustments are only relevant to those of you working in income and expenditure, but both approaches can end up with having unpresented items. Unpresented items are those things that have happened, so you've paid out or you've received the income, but they haven't shown on the bank statement. Tends to be mostly checks, and so there's obviously less of an issue now that checks are less relevant. So if you've put through a payment in March, there was a check payment, you've included it in your cash book, and therefore it's on these figures, that's absolutely correct. If it happens not to have been cashed by your supplier in through the bank, then it will adjust your box 8, but that's correct. It's not going to necessarily be exactly the same as the statements by the value of anything that you've got left unpresented. But an unpresented item is something that's taken place, not something that you expect to happen, which is your credit or your adjustment. So just be clear on the difference between the two. Okay, because often I see unpresented items dealt with as creditors, and there's a confusion there, so do make sure you're clear on that. And again, the practitioner's guide will help you if there is any issues around that and understanding that as well. So line 9 is your fixed assets and your long-term investments. So obviously that's your asset register and the figures from your asset register. So again, this is something that you can be thinking about now, particularly if maybe you've had some new assets or some disposals in this year. Go and update that so you've got the figure ready to go into box 9. Again, you need to be consistent in your reporting of the total. Majority of the time it's the original purchase value, but if you've moved to a different approach, make sure that you're consistent with that, and just make sure you've got that supporting asset register, and ignore depreciation. Again, that's something that kind of crops up occasionally when you have clerks or counsellors that come from a very financial background and are used to depreciating items on the asset register. Depreciation is not relevant here. It just goes in at the point, the value at which you bought it, and when you dispose of it, it's just gone. There's nothing between those things happening. And line 10 is borrowings. That's your figure that you owe as at the year end, and that's normally your loans from PWLB, and they'll have a schedule of what that will be, so just make sure that that tallies up to that in box 10. Alongside that, you're going to have some additional documents that need to go with the accounting statements. So as we alluded to a couple of times, the bank rec, obviously agreeing to line 8. If you're in income and expenditure, you need to have that reconciliation between lines 7 and 8 to explain why those two values are different. So your debtors, your creditors, your adjustments, your VAT, etc. And you also need to provide an explanation of variances. So this is comparing what you've just completed for the current year compared to last year. And if you have variances over 15% for lines 2, 3, 4, 5, 6, 9, and 10, or if box 7 is more than twice line 2, so if your funds carried forward is more than double your precept, you need to explain it. Okay, it's also, I think, if the overall difference is over 100,000, but that's pretty significant, so I wouldn't imagine that any of you are sort of working in variances of that great as a size. So you need to explain why that is. So it's about numerical explanations. It's not simply just enough to say, we had more payments, this happened. You need to give a breakdown of values to break it down. If your box 7 is more than twice box 2, so basically your funds are more than double the precept, you will need to give a detailed breakdown of your reserves as well. It's absolutely fine to hold a high level of reserves, providing they're allocated and you've got reasons for that. It shouldn't all be in the general reserve. That's going to be a problem if you haven't got anything allocated out. But if you've got your earmarked reserves for specific reasons, projects, purposes, you just need to provide that information. Okay. Then we can move on to the signing of documents and the publication requirements once you've got that information collated. again, I would refer back to your external auditor's website and find that flowchart or decision tree that takes you through, because it's a very good list of all the things that you need to do in the order that you need to do them. Okay, I'm going to sort of summarize this here now, but I think it's important to make sure you've got all that information so you're completely clear, because I've seen many times when they pull you up on things not being, you know, the statements weren't signed off before the date was set, etc., etc. So make sure you do those things in order. So when the accounting statements are completed, the RFO will sign them off, and then you're going to have your meeting of the council to receive and note the internal audit report, to approve the annual governance statement, to approve the accounting statements. At this point, if it's relevant that you are able to exempt yourself from audit, that can be approved, and bear in mind that if you do so, you only need to send that to the external auditor. They do not need any other information. It's also going to save you the audit fee as well. And the chairman and clerk sign the annual governance statement, and the chairman signs the accounting statement. So this all needs to happen. You need to be in a process of, at the very top, you need to be able to complete everything, have that meeting to sign and approve everything before you then move on to thinking about the signing of the year and the commencement of the dates of exercise of public rights. Okay, again, I've seen people picked up on that before where that's not happened, where they've not been signed and approved before the date's been set. So be clear about that as well. This is basically where accounting records must be made available to be viewed by any interested persons. Electors can also raise questions. So as it says there, the AGAR must be approved and published before the inspection period starts. So make sure you've got your date. Obviously, I'm hoping you've got them in already, but at least you've got that date, and therefore you know what dates you're going to be able to be working to. The period must be 30 working days, and it must include the first 10 working days of July. So working days are obviously Monday to Friday, no bank holidays, but I don't think that's relevant this year. And the 10 working days of July. So the 1st and 2nd of July, I believe, is Saturday, Sunday. So you're working with Monday, the 3rd of July, and then so it's literally those first 2 weeks. So make sure that they include it. Again, when you get the information from the auditor, it will say likely on there the dates that they recommend or the latest dates you can go to. So again, make sure you work with that, because again, I've seen instances where councils have been pulled up on the dates not being correct and not including those working days accordingly. Okay. So as I said, then if you're exempt from audit, you just send that only to the external auditor. Don't send them anything else. They don't want anything else from you. And also as well, when you send stuff to your auditor, if you do need to send stuff off, if you're posting it, that's absolutely fine, but don't email it as well. So one approach only. They don't want to be bombarded with post and email. And if you're posting it, make sure you obviously keep copies of everything that you've sent. So that's your not originals. So you're not going to get them back. And if you've got queries, you need to have obviously those originals for you to have. So if you're not exempt, you're from audit, you'll need to send all that information to the auditor. So the AGAR, the explanation of variances, the bank rec, the details of the public rights, and any other information. So that's if you're I&E, you need to explain the reconciliation between lines 7 and 8, and if you've had any issues that you need to explain, or if you've needed to restate any other additional information that you need to provide. So just this is why it's so clear to make sure that you've not only when you've done everything, you've got all that information collated, you know what you need to do with it. And then you can publish those documents. So if you're exempt, you basically just publish everything at this point. So the AGAR, the variances, the bank rec, your certificate of exemption, the arrangements of the public rights, details of your external audit. So that can all go at that point because you're exempt. Okay. If you're not exempt, then you can publish it in the main, what we've just said there, but also that the declaration that the accounts are as yet unaudited, because you're waiting for that to come back from the external auditor. When that does come back, then you would add in the conclusion of the audit notice and then any amendments and the auditor report and certificate. So just make sure that you're following that process and you know where you need to go, because there is quite a lot of information, particularly if you're new. So it's not only about the collation of it, but what you actually do when you've got it. So as I said, the flowchart and the decision trees and everything that the external auditor has is really very useful resource as well. Okay. And then just to finish off today's session then is about looking ahead to the new financial year. Now I've put this at the end of the session in theory that it sort of comes after this year end being finished, but actually probably for most of you that's probably not going to be the case. Some smaller councils we work with like to complete their year end before they then move on to the new financial year. But for most of you, I imagine that's simply not possible, because obviously things are going to be happening from April, and you're likely going to be able to be running your cash book for 23-24 alongside you completing the year end. If that's the case, then while you've got this bit of time now, I'd be looking to set up the cash book for the new financial year so that it's ready to go from the 1st of April when you start to need it, and it's not work that you've then got time to find to do. And therefore, at this point, it might be worth objectively reviewing your accounts records, your cash book at this point, to think about whether you want to change anything, because the start of a new financial year is obviously a good place to do that. So there's some questions just there to think about potentially. Is your accounting system fit for purpose? So does it do what you need it to do? Does it give you the information that you need? Is it in the format that you like to use it? Can you run reports off easily? Is it holding all the information that you need? Do you need training on it? Have you been trained on it? So many times we hear from people, they just, here's a laptop, here's a book, off you go, and you have to sort of train yourself. So is there training available for you to get? Or if you moved on, have you got anything to give to the new clerk? Is there a training manual? Is there anything in place for that happening? Does it suit the needs of your council? So as a wider consideration, how easy is it to access? Can you access it on the cloud? Is it able to be accessed read-only by councillors? That's things about security. Are you backing it up? Is it on a single device somewhere? And if your council offices blow up, is it lost? Which is obviously not a good thing if you need to complete the year end. And how could improvements be made? So all those things to think about now. So it might be considering a change of medium. So obviously there's a few of you in here today on spreadsheets. So if you did want to consider moving to software, luckily we have nobody using a book that I need to tell that they need to move on from. So that's good. But it might also be the coding structure as well that you might want to review and change in terms of the way that you allocate information, then you report on that as well. So in terms of thinking about how to structure your cash book, the first thing I'd say that sounds really obvious is to base it on your council budget or your preset breakdown. Now, as I said, that sounds fairly straightforward, but quite often we see councils where they have a very nice budget sheet broken down into different sections, budget lines, values, codes, all lovely, beautiful budget allocations. And then they have a cash book where the information simply doesn't match up. The codes don't allocate out, they just random things in there. But if you were then asked, how much have we spent against this budget line, is not an easy answer to pull up. It's an amalgamation of lots of different elements in the cash book. So then allocate those payments and receipts out to those budget codes, and then you can easily report on them. If you want to group certain things together, do so. If someone was going to say to you, how much have you spent on running the village hall? Make sure that you can report on that easily without having to do a lot of additional information. So it might be that you want to add additional codes. So if you've had a spreadsheet that you've inherited 5-10 years ago and no one really knows how to change it, does it need some more information in it to allocate it out? Is it sort of, you're working with very general headings such as admin or open spaces, but you want to break that down into more detail? Or maybe it's too detailed. Maybe there's a code for every single thing you could ever think of, and lots of them you never use, or they're now redundant and you want to remove them. So think about that as well. And also whether you can put more information in your accounts system or cash book. Do you include the invoice number, for example? Have you got the VAT number of the supplier in there? Are you able to upload a copy of the invoice, or are you having to keep rifling through your filing cabinet to find some of that information, just to speed things up, give you that little bit more time as well? And again, just a quick example from Scribe, just in terms of some of the lines in here. So thinking about being able to have budgets against the different sections that then pulls the actuals through that you can instantly report on to see the variance. So it's not a long process of trying to find out what you've spent on different lines within things, and you can see that information. Okay, lots to think about there. Hope you found it useful. I'll stop there and I will hand you back to John. Thank you, everybody.
Awesome. Thank you very much, Hannah. We will be going to Q&A in a moment, followed by the tapping session with Becky. I see that she's just turned up. But also I have another surprise for you today. We've got a little poem for you guys, and I chickened out. I should have said the poem earlier, but I chickened out. So this is our poem that we created for year end. So I'll run it by, yes. So Year-end draws near, books to be closed. The clerk's work is never done, numbers disclosed. With figures and ledgers and eye for detail, the council's finances are kept on the trail. Through audits and reviews, the clerk stands tall, guiding the council's finances and ensuring they stand tall. So here's to the clerk, the guardian of the books, ensuring the council's finances stay solid and never mistook. There you go, there's your year-end poem to get you all excited. So I have 3 additional tips for you on top of Hannah's. As you know, we talk to lots of councils every month, hundreds in fact, and we have over 1,000 customers now. And through understanding how they do year end, we created this model. I've shared it with quite a few of you before, and we called it the council accounts hierarchy of needs. And it's basically also about the amount of effort in this pyramid in terms of what you should be putting into to be prepared for the year end, because that's our goal, the top of the pyramid there, the accountability part, the publishing our external audits and all our papers, and then down the bottom it's all the administration that we have to do to reach there, and then the monitoring against your budget, etc. And what we normally find is customers, before they join us, they're doing it the other way around. And you're saving, you're not doing all your admin on a monthly basis, and then when it comes to year end and doing your AGAR, that's where all the work happens, the bulk of the work happens. And this is really, you can feel it building up throughout the year, the stress and the anxiety building as you go into Q1 of the first quarter of the year, that you've got to do that. So we kind of named it the cash book crisis, because you're not focusing on the cash book, as Hannah's illustrated in her talk. So that's how my first tip to you guys is always think about cash book first. Always take care of your cash book, entering your transactions, doing your bank reconciliation, and having good coding structure, as Hannah suggests there. If that is taken care of, then monitoring your transactions and your budget versus your actual, and producing reports to take to council is going to be so much easier. And then when it comes to year end, all the data's done. It's already, you've been keeping it up to date every month, so it should be a breeze doing year end, and there's no actual workload. My second tip to you is download this checklist that we've created for you. It's free. It's the year-end checklist on all the things that you should do to prepare for your checklist. And there's also, we put things beyond actual year-end. It's just throughout the year. I've just dropped it in the chat there. You can click on it and download it for free. And we also put just good examples of good clerk accounting habits. But going back to some of the poll, the responses to the poll, people saying they don't have enough time to do year end, and there's anxiety and stress related to that. And that's exactly why we built Scribe accounts, is really to build purpose-built software that is specific to parish and town councils, to make it a lot really easy to use, really easy to take care of your cash book. You can access it anywhere online, so you don't have to, wherever you are, even if you're in a meeting, you can log in and get the latest reports, and ensure your compliance being hosted and backed up on the cloud on a daily basis, and you have a full audit trail. So what's really good about Scribe accounts is if you're in the cash book, you're doing all your work down the bottom of the tier there, doing all your administration. The rest of it basically comes for free, because all the reporting and actual your AGAR and your statement, that all is tap of a button, it's instantly there. So you actually, year end is a breeze, and this is what our customers tell us. And just doing your basic administration on the cash book level is super easy to do. And not only with the software, which also what our customers really love about us is the support that you get. We have qualified accountants, we have Silk qualified support team as well. They're there ready to help you if you have any issues, any difficult questions, which hopefully we'll get some coming up now, Hannah, just to test you, anything related to year end. So if you want to know more about us, you can just have type yes in the chat, and happy to have a little chat with you to find out if you have any challenges with year end and anything we can help you out with. So otherwise, let's take it to the floor and get some questions. Anyone who has a question, just raise your hand and I can call you to the panel to ask your question. We already have one in the chat there, wasn't it? I think it was one, wasn't it? Yes. So Joe Hazelwood, if you don't mind unmuting yourself, put your video on if that's okay, and then ask your question. Otherwise, I will ask it for you.
Sorry, I couldn't get my mute off. Yes, I may have misunderstood you, but I've got one council who's tiny, and I thought I had to send them, apart from the declaration of exemption, all the whole caboose, the AGAR, the bank recs, and is that not the case? They've never turned. In fact, in last year, I asked for an extension. They didn't turn a hair and say.
Oh no. Well, if you exempt yourself, that's kind of the point, and actually, you save yourself the audit fee. So you only just send them the exemption. You still do everything and publish it all in the normal way. It's just that you don't provide it to the external auditor. You just send the exemption certificate. They accept that you're under that threshold, so you don't do it.
Okay. Well, yes, no, we weren't charged, but
oh, that's good. Oh, well, I don't know whether they just had too much information. So that's
okay. Thank you.
Good. Hello, lovely.
Christine Everson.
Hi.
Hi.
I've got Scribe. Last year I was very new, and another clerk, the previous clerk, actually did the AGAR for me. So this year I'm doing it myself. My question is how can I tell whether I'm income and expenditure or receipts and payments by looking on Scribe or on the AGAR?
Yeah, the easiest thing is just to look at last year. If 7 and 8 are the same figure, then you're almost certainly in receipts and payments.
So it's the same figure. Okay.
If they're different, then you're definitely I&E, because they're your adjustments and your VAT differences.
Okay, so if I have a look at that, I should be able to tell.
And your year-end menu down the bottom will say rec and pay.
In Scribe, it will tell you what you've done, but just make sure you check it into what you actually submitted to how it was done. But that's
so just looking, they're not the same. So I should be.
You're in you're in income and expenditure.
Income and expenditure. Okay, thank you very much.
No problem.
Oh, any more questions? Must have some. Put your hands up or shout out or drop if you can't talk, walking the dog or something.
I think there was one in the chat, wasn't it, about moving? Yes, so
Amanda.
Alison. So the one about.
Oh yeah.
Hi. Sorry. Oh, can you hear me?
Yes, I can.
Yes.
Can't see.
Lovely. I've got. Last year was my first one, and it went over 25,000, which was very unusual, and it's not normally over 25,000. This year I expect to be under, and I just wondered, do I just then do the declaration, the internal audit, and not the external?
That's it, correct. Yeah, once you get to that point of knowing where you're going to be, so if you're obviously close, you might have to get right to the end. But if you're still under 25,000, when you've got everything in there, then absolutely you can exempt yourself. As I said, there are a couple of criteria to just check those other things as well. But yes, if they're all true, then yes, you can exempt yourself, and you just do your certificate of exemption.
Thank you.
Perfect.
Good. Yeah, Gerard said, can I politely mention that the slide preparing for year-end and certification of exemption do not apply in Wales?
Thank you. Yes. So there's a slight difference. So this is predominantly about the boxes that you'll recognise are the English version. Obviously, the Welsh version, there are some more boxes. So the general sort of what you do is the same. It's just you have more boxes to complete. And if you're in Scribe, then there is this particular setting that you can set it to the Welsh version, and it will pull it through to the correct boxes. But yes, today's session is predominantly based on the number of the boxes that you would have in England. So thanks for pointing that out. Lovely.
Nice, politely suggestion.
Hello. This is going to be my first year end. and we started with Scribe last year. The exercise of the public rights, so I've just got a bit confused by that bit. So we send out to the external auditors first, don't we?
So you need to do everything. So complete your AGAR, get it in meeting, sign it off, approve it, sign it off basically. And then that allows you then to set the commencement. So you need to tell the external auditor the dates that you've provided, and you need to just be very specific about those dates, because it needs to be 30 working days, including those 10 working days of July. When you get all the information that comes through soon from the auditor with all the information, they do have a specific form that you fill in that says when those dates are, and on it, it will tell you like the recommended dates, and it will tell you the last possible dates that you can do. So just sort of make sure they fit around everything else, that you've obviously got your time for your meeting to sign it off, but you've also got the date range to include those days as well.
Okay, and then this is just where we're publicising it on the internet for any members of the public to have a look at. And
you make that available, so if anyone comes along and says, yes, I would like to have a look at whatever, they can then access it. They've got that time of period to have to look at it.
Okay, thank you. And so we've been appointed the new external auditor. It was PKF.
Yeah.
So I suppose just get in touch with them, or I mean, I'm expecting them to do a mail shot. Yeah,
you should hear from them in the normal way, and generally I would expect it to be pretty much the same as what you've done previously. It might just be slightly different format, or slightly, so just obviously wait for them to come from them as soon as they go on their website reasonably shortly. So if not, worth just having a look. If not, if you don't get something, just you'll be able to access everything on them, but you should just hear from them, and it should be very similar but possibly slightly different, because it's different.
Cool. One more question by Amanda.
Thank you. It's a question that other clerks to very small councils might be asking, and that is, when we've got a very small council and using a spreadsheet, it seems to me like it's going to take us a disproportionate amount of time to prepare the year end as we get larger and larger. So I've been doing it 3 years now, and we've gone up to having 50 lines on the cash book. At what point does it become, in other words, do you have a Scribe light that would be affordable for a little council like ours? At what point is the break even? Where's the crossover point?
We'll get in contact with you, Amanda, on that. We are actually looking at producing a Scribe light, but yeah, I mean, our general opinion is whatever level you are, you should be looking at a more robust solution, because of spreadsheets there can be so many problems, just around data protection and data backups and data security, and obviously human error can be a big problem, and there's no audit trail and there's no controls in place at all. But yeah, we are looking at for the very small councils a light version, but we'll get in contact with you. What parish are you?
It's Upper Slaughter Parish Council is the little one.
Upper Slaughter. Okay, no problems. Okay.